You're welcome to your regular market and investing program, the DLM Bondshow. And today we'll be discussing an interesting topic, state bonds. With me to discuss this interesting topic is Iyhobosa Evmosomon. Great to have you.
Thanks for having me.
Now, over the years, state governments have been borrowing loans from IFCs like the African Development Bank, the World Bank, and even the European Commission, all for infrastructure, water rehabilitation, roads, and various other projects. Now, the bond market is also designed to raise capital for projects like that. I want to know, is there a benefit engaging the bond market for the state compared to the loans borrowing from IFCs?
I'll definitely say yes, because there's a significant benefit that accrues to states from accessing the bond market. For example, if you look at the rates at which these bonds are issued, you have rates between, say, the lowest being about 12.5 to about 15.5, and you also want to consider the volume they can access in the bond market, right, which might not necessarily be open to them from banks, as it were, in terms of loans and all of that. Because if you look at loans are majorly short-term funds. So effectively, there are things that you probably just take out to just manage maybe your working capital or something like that. But if you're looking for long-term projects, you're talking of investing in long-term projects or financing long-term projects, then the capital market is where you can definitely access. Because what you don't want to do is a mismatch, is to have a portfolio mismatch, or you have an asset mismatch where you have short-term funds financing long-term infrastructural facilities, because at some point in time there will always be a gap in terms of funding. So that's why you find out that most states would rather go to the capital market to access the window of the bond market to see, okay, at what levels can we raise these instruments, and what volume can we necessarily raise to finance whatever infrastructural developments we have in our states. So by and large, I think that's a major drive for states accessing the bond market.
So what type of bonds are these states involved in, and what are their tenure levels?
Typically, you find out that state bonds, I think currently we have about 18 state bonds that are currently in issue, and the minimum tenure we have is about 5 years, while the maximum it's about 7 years. So you have most states playing between 5 to 7 years. And even if you look at the yield in terms of the rate at which the bonds were issued, you'll probably be looking at between 12.5 to about 15.5, right? In terms of volume, I think Lagos State has the highest, which is about 80 billion. 80 billion. I think it was the last issuance that they had at 14.75 thereabouts. So now going back to your first initial question, yes, that what are the advantages and all of that. I mean, it will be very difficult. I know Lagos State is is more like the cash cow of Nigeria, if I may use exactly. It's the financial hub of Nigeria, right? So banks might not really shy away from lending to Lagos State, but you'll probably be looking at syndication of banks. So they'll probably be going for a syndicated loan if they are to raise 80 billion. So that's different banks coming together to loan them that cash, and it might not necessarily be as low as 14.75. You might be looking at 18, 19, or even 21, as the case may be. However, they can access the bond market and issue and get 80 billion off the bond market because they have fantastic revenue inflows into the state. So investors are willing to, buy Lagos State bonds and all of that. Then in terms of what sort of in terms of structure wise, what sort of bonds, majorly they go for fixed bond, fixed coupon payment, bullet payment. Reason being that the bond market as it is still very, it's not new, but the market is not as developed as you have in the West, the Nigerian bond market. It's still a developing market. However, the market has moved a little bit because you're beginning to see more capacity in the market in terms of intellectual capacity, and you're beginning to see financial houses putting together amortizing bonds for states, right? And you even have where you have bonds where you probably have prepayment structures before the maturity of the bond. Typical example is the Iyhobosa State bond. Is an amortizing bond, right? And a lot of other states are beginning to take that cue. At the end of the day, it is cheaper.
That's very interesting, because from what you said, 18 states have engaged the bond market, and I believe that from those 18 states, other states will begin to see the need to engage it because of the provisions it has for long-term financing of projects, considering the infrastructural deficit in Nigeria.
Yes, whilst that might be the case, right? It's not just the market. You can just wake up and say, okay, I'm going to issue a bond today. I mean, there are certain procedures you have to go through. There are certain criteria you have to meet.
Based on what you've said, what are the criteria for a state to engage the bond market?
I think first and foremost, you have to look at the cash flow of the state. Outside of the cash flow, you have to look at the accounts of the state. In what condition, if I may use that word, are the books of the state, right? Then, if you also want, if the state is looking at pension funds investing in the bonds, there are PENCOM requirements that they would definitely have to meet in terms of remitting pensions for state employees and all of that. Then outside of that, they also have to get a state rating as well. Then there also has to be the ISPO. From the ISPO, basically is like an irrevocable standing order where a portion of the state's federal allocation is deducted at source. And now this is done just to protect the investor if anything goes wrong. Going into this week, right, we have about 94 billion from the primary market auction. We also have about 104 maturing from the OMO auction. So by and large, the market should be up about 100 billion this week. So we see CBN actually coming back to the market to continue with OMO bills like they did today. There was actually an OMO auction today. We had the 150-day and the 87-day that was issued. Except we begin to see direct inflows from foreign investors, I don't think the demand we have within the system, which is basically from pension funds, is enough to change the tide of the market, which has been relatively stable for the past 3 to 4 weeks.